Hello, everybody. Welcome to the Closing Beat. Happy Thursday. How you doing out there? Good, I hope. All is good. Welcome, welcome. Happy Thursday. This week just goes by quick. It's so freaking quick, man. Unbelievable how quick this thing goes by. But hey, it is what it is. I'll have to pull up the stuff here. I can't actually see you guys talking to me and whatnot, so I'll do that while we're talking. Tonight's Wine and Wealth for Clients, taxes and your rental properties. I see, every time I start talking to clients about this stuff, I see, you know, you're not supposed to know it all, I guess, but I see little ways to improve. Actually, that was almost all of my calls today. So tonight, we're going to cover that. Taxes and your rental properties. We're doing everything involved in that, and we're going to do it like this. Is it this? Then do this. Is it this? Move here. No? Okay, go over here. We're literally just going to break it down so that we don't miss out on any money, man. Can't be missing out on that money. Also, as far as the stock market goes, did you see what happened today? Huh? What happened? Look, you go over here to the S&P. We talked about this before. No excitement until we get above that line. What happened at that line? If you break it down, you look at a 5-minute chart. There you go. What happened when we broke over that line today? This is right that very moment. Actually, the line is there so you can see. You notice all that buying right there just in that little tiny window? Now that's proof that everybody was looking at the same thing. I like to tell you ahead of time instead of I told you so. You can even see probably in the background there, look at all that volume. Look at what's going on there. So everybody's looking there saying, look, I don't want to be the first person to dive into this market. Tell you what, if it gets over that line, I'm excited. I'll dive in. The problem I have with it is, do you think it's kind of like a little fake out? Maybe just a little bit? Maybe a couple days higher, and then we go, oh, no, wait a minute. They're not going to have that debt ceiling deal all pretty and everything wrapped up this weekend? Shoot, right? What part of any of us thinks that this debt ceiling thing is just going to happen? Wow, it turns out we were bickering this whole time. We couldn't come to any agreement at all, and now, whoop, it's done. Right? So I kind of worry about that, where the market's getting excited because of a technical event, clearly, algorithms, everything deciding to buy at that point. However, news events could take that away rather quickly there. The options market does not believe there's going to be a debt ceiling deal. The stock market believes that there is. A very weird disconnect there if you're an options trader there. S&P options market, particularly on the SPX, shows a 6% chance now of a 5% move higher. I know that sounds weird, but that's how we do it. So you have people are betting on the fact that there's only a 6% chance we'll go up 5 total percent. However, they're betting on a 19% chance, or now there is a 19% chance that we go 5% lower. In other words, the option market is saying it's not going to be come on, they're not doing the debt thing. It's not happening. We're going to end up seeing some bickering back and forth that makes it look like the deal's not going to go through. That just flipped, by the way. So we were previously more odds that we would go 5% higher than 5% lower. That has since changed. That has flipped there. And 19%, you think, well, that doesn't sound very exciting. A 19% chance that we go down 5%. It doesn't sound like there's a big chance there. That right there is an extreme reading. We don't normally see a 19% chance. You get that when you're like at severe lows and you know that rookie money's in there betting. 2001 is the last time where we flipped to such an extreme like that. So the stock market is going, yay, broke above a technical range. Oh my God, this is exciting. The options market's going, oh, come on, not so fast, right? It's flipped. And so we have this rare, very rare moment where selling calls is attractive from a premium standpoint, right? A little higher premium for doing so. Buying puts as a hedge is also attractive, right? It won't be like that for very long, but they are both attractive relative to themselves, whereas typically you don't see that. In order to buy protection or a hedge, or you want to bet on the downside, I don't know. In order to do that, it costs you a little bit more than it's actually worth to do it. right? It's like the casino. They know what's going on. This is a rare event where now you could actually buy insurance, bet on the market going down, or hedge existing positions for less money than you normally do. And that's the impact of that happening. So I take a second to explain it. But that's what's going on in the market. And so while we're all getting excited about this, the bigger money is saying, well, the odds are to the downside, not the upside, and making that sort of counter trend at the moment, counter trend decision there. So rather cool. I find that stuff fascinating. Hopefully you learn something by me rambling on every now and then. Breaking news, by the way. I don't know if you knew this. Did you hear the Disney news? And not the DeSantis thing. None of that. I'm out of that. I don't know what's going on.
Okay. No, I didn't hear it.
Breaking news. You heard it. Oh, Kevin's disappointed. I saw the tear in his eye. The Galactic Galaxy Hotel. These guys, they spent like $2 billion on it. Maybe more than $2 billion. At least two, maybe more. They're closing it. It just opened. It hasn't even been open a year.
No.
They're closing it down.
Unbelievable.
That's one of those where I was like, when the prices come down, because it's $1,200 per person. For a 2-night thing. Yeah, Cody's out. It's a 2-night minimum stay. It's a whole event. $1,200 per person. By the time you buy like a Galactic Old Fashioned and stuff, you're at $6,000 for a family of 4. Right? So they're just going to shut it down out of nowhere. Right? Cody, he's speechless.
I can't believe it.
Oh, that's crazy, man. That just shows like it was a good idea, but how many people, right? We don't have that money. We're not spending that money on 2 nights, man. That's crazy. All right, back to the markets here. Today, by the way, adding to the excitement was a combination of 5 Fed members speaking. These guys won't shut up. So there were 5 of them out there today. I looked at every single one of their comments today to give you a summary of what happened. The first Fed member, it was more aggressive. They said inflation is not falling fast enough. They said this earlier in the week too, so they're just sticking with their message there. By the way, inflation is falling faster than it went up, so not sure what they're unhappy about. But they said inflation is not falling fast enough, more hikes. Fed member number 2 says, you know, I'm okay. We can wait and see how this is going to pan out. All right. Fed number 3 says, okay to wait and see the impact of the hikes we've already done. So I'm willing to change my mind, but for the moment, let's just see how this goes. Fed member number 4 didn't even mention it. Talked about everything else. Actually talked more about the banks than anything else. Fed member number 5 says, I'm open to more rate hikes as an insurance that we in fact did push far enough, but I'm going to be flexible to the data that comes in. What do we learn from all of that? The consensus is, let's just wait and see what happens, right? So stock market likes that, of course. When you're looking at the S&P here, we're now up 10% year to date. Is that exciting? I don't know. We're up 10% year to date. We've obviously broken out. What did we just talk about for the last 4 days going into last week as well? Quiet, 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 quiet. Bang! Out of nowhere. Now you think you're missing something, right? What we talk about. If the market goes higher in a big way, you're going to feel like, oh my gosh, I should jump in. If the market goes lower in a big way, you're going to feel like, oh, this is the end, right? Because of how quiet it was, not because there's anything really interesting going on at the moment. The market is fascinating at doing this. And to prove it, here's a distribution I often share with clients. Distribution of the stock market's returns. How often do we have monstrous moves, right? So this is a normal math. You guys have seen this in your statistics class, maybe high school, college, whatever. Most of the time we do a whole lot of nothing with a slight skew to the upside. See how there's a slight skew there to the upside, ever so slightly. Most of the time, nothing. Occasionally, bam, big move. So what do we have now? Most of the time, nothing. We've spent the first part of this month just barely doing a whole lot of really nothing at all. Actually, the last 3 months, nothing's really gone on. Really quiet, really quiet, really quiet, quiet. Boom. Oh my God, do I got to do something? Is now the time? Do I put my money in? Do I get excited? Yeah. Come on. Come on. You know what I mean? All right, the NASDAQ. This is kind of funny. It is so if you look at the NASDAQ, 26% year to date. Okay, now look at the Dow. What's the Dow up? 1% year to date. The NASDAQ is officially outpacing the Dow by a full bear market. Like, just imagine the disconnect there. We have a whole bull market, which is usually defined as being 20% off the lows, right? So a bull market. The spread between the two is more than a bull market there. That's kind of interesting. I did a little research here, just out of curiosity. Does that happen? Is that normal? Am I the one that's weird here by picking, just maybe bored and looking at all this data? No. If the year ended just like this, with that wide of a spread between the NASDAQ and the Dow, it would be the first time ever in history that that happened. What does that tell you? I'll tell you. It tells you that your odds of the NASDAQ continuing on a pace like this, probably not that good. Or it tells you that the Dow could tighten that spread, right? So don't let me mislead you there. We did this with oil in the past, right? We've got this really, really wide spread, and it's not going to finish that way. There's just never, ever been a time in history where it's done this. So either the Dow will make up the difference. Don't really see how that happens given the performance of the stocks in the Dow. Do you get United Healthcare to just blast off? Why? Why would it do that, right? So either the Dow does something that's probably not very likely, or the NASDAQ takes a break. So anything NASDAQ related, if you have yet to say like, well, this is cool, I'm excited about these profits, this is awesome, I will take some of these profits, right? 1991, by the way, is the only time where the NASDAQ, it did pull back, by the way, during the year, but the only time the NASDAQ essentially kept going and the Dow closed the spread there. Do you remember what happened in 1991 and why the Dow did that? I'm going to actually let you sit and think about that one and see if anybody knows. All right. I do want to point out FAANG stocks. Your Facebook, Alphabet, Netflix, we're going to say Apple as well. And I said them all, right? Facebook, Apple, Alphabet, Netflix, Amazon and Google. Yeah, okay, and Alphabet. So I get confused by the G because they're not a G anymore, they're an A. But we're doing that sort of thing in this country right now, so that's what it is. If you could see the look on Cody's face, I mean, he just woke up. Anyways, the G is an A now. So if you look at the FAANG stocks, he's not going to let me forget that one. The performance of the FAANG stocks right now is in the 98th percentile ever of their performance. In other words, they are more than 2.5 standard deviations away from their 50-day moving average. You know what I'm talking about there? Oh, I don't have it. So my blue line usually is the 50-day moving average. This is Alphabet. When a stock gets that extended, great, congratulations. But it's not going to do that forever. You can even just look at Alphabet. It does not do that forever. So when something like this gets so extended, which by the way, all of them are now, what do we have? A recipe for a pullback. Let's put it all together here for just a second. We have 5, really 6 if you include NVIDIA. Right? So we have 5, and Microsoft. I'll say 7 names. You've got 7 names that are like, we're way up here. We can't run up this hill much longer. What happens if they pull back? In particular, what happens to the NASDAQ? Uh-oh. We already know that the NASDAQ's doing something really, really odd here that has never happened before, ever, as hard as that is to probably, believe. If those NASDAQ stocks take a break, do you think the NASDAQ's just going to magically keep going up there? So put those stock positions together, or stock information together with the index and go, whoa, wait a minute. Maybe I'll go do something in the S&P. Maybe I'll look at the Russell. I'm not saying that's a good idea, but you look at things like that and start putting the pieces together. It's fun when it all clicks and you can just sort of put it together, right? All right, let's take a look at some stocks in the news here and get out of the way so we can do a little wine and wealth. Bath & Body Works, not Bed Bath & Beyond, Bath & Body Works. So they come out with their earnings here. Why do you think the stock's higher? Earnings were better than expected, revenue better than expected, guidance was okay there. But management, if you look inside their transcript, management says, we're really focused on making our supply chain efficient, our inventory levels efficient, and we're going to focus on cost management. So our dollars that we make as a profit, we're going to go ahead and put the effort towards that. We are not going to put our effort towards building more stores and getting more SKUs and having more stuff. No. We're just going to go ahead and do our own thing. We're going to become more efficient. Let's put that to the test. In a Late cycle economy. You've seen it. You've been watching a show. You know exactly what to do. The stocks that perform the best are which ones? The stocks that pay back their shareholders by far. You pay back in the form of dividends or stock buybacks, your stock is rewarded more handsomely than the other stocks. The second most best performing stock are stocks that invest in themselves. R&D, spend money, like these guys are saying, right, on our supply chain. What can we do to make this more efficient? Oh, it costs $10 million to do this. Let's do that. Let's not expand. Let's do that. Those stocks get rewarded. The worst performing, there's only 3 tiers, the worst performing stocks are those that say, we're going to go buy other companies and we're going to expand and we're going to grow in the middle of a late economic cycle. In other words, when things are slowing down. So these guys are right there in second with the second best option. They said, well, you know, we're not going to buy back more shares. We're really not going to pay more of a dividend for the moment. We're going to make ourselves efficient. So when we come through the trough of an economic cycle and start heading back up again, we'll be better off to have higher profit margins and have our, sort of have our ducks in a row. Anyways, Walmart, of course, sort of wrapping up the earnings season here. Better than expected earnings, revenues as expected. In fact, earnings beat by 12%. Revenues or total sales beat by 2% there. Inventories fell by 9%. Most people were thinking 6.7, right in there somewhere. I forget the number. I'm just kind of hoping someone will catch me on that, but it's right around 7%. And they said the same thing that Target did. They said the same thing that Home Depot did. So you follow this stuff day by day. It's what we do here. It's our lifeblood is growing clients' accounts, right? We don't make more unless you make more. You follow this day by day and you go, didn't you kind of already know ahead of time that that's what was going to happen? They said, going forward, we see slightly less traffic, slightly less sales. Wasn't as bad as Target, by the way. But other than that, not too bad. All right, Amazon in the news here. They're focused on the cloud, man. They're spending some money. They've decided they were already spending this money. They've just reiterated and confirmed that they're doing this, building out cloud platforms, but they're going to do it over in India to better compete globally. Netflix in the news here. Good for them. Congratulations. They have 5 million active users of the slightly less expensive but ad-supported offering that they have. They call it something, and I can't think of it. Tier. The ad-supported, slightly less expensive tier, 5 million users there. That's good news. Oh, and lastly, I just want to point out, there's a couple more. Cisco. You see how nothing really happened today? We talked about this yesterday, or two days ago. They usually beat on earnings. They usually beat on sales. And they usually raise their guidance. If they offer it at all, it's usually guidance that's been raised. What we talk about? There's no real reason to trade the stock. You can day trade it, of course, but there's really nothing to get from that. If they always deliver, even just a penny better, the stock's not really going to do anything magical, and that's exactly what happened. So I like to follow up on the things that we talked about so you can see in real time, this is what we thought. That's exactly what happened. Alibaba, by the way, solid beat earnings-wise. We happen to own it, so I like to keep an eye on this thing. Hasn't been the best of performers as far as stock performance as a company, though. Yeah, right, not bad. Earnings up 60% year over year. That's 60%, 60. And most of that is due to, it's called cost optimization. If you want to talk like Doug over there, and use those types of words. It's cost optimization. In other words, they found more pennies by squeezing more out of you guys there. Margins were better, which kind of offset. You know Taobao? Are you familiar with them? Taobao is like their B2C version of Alibaba, right? So Alibaba used to be more B2B. Now they have Alibaba Public and all that stuff. But that's more of their, hey, you're really buying from Alibaba, but if you're a consumer, come on over here and you can get great deals on really cheap stuff. That's essentially what they did. That lost money, but because of their cost optimization, it sort of helps offset that a little bit. All right. I'm going to hope that I left the screen open here and take your questions if you have any. And Jazz After Dark tonight from Cody's question, and I'm sure a lot of you had the same question. Can you buy sunscreen with an HSA? like the money from an HSA? And for that matter, what can you buy? Like what weird things can we use to tax-free, and of course, get your deduction for putting money in there? How can we use the HSA legally to buy some of these oddball things that the government says, yeah, go ahead. I'll give you a hint. You can buy sunscreen with an HSA. And I'm going to give you the exact IRS publication. I'm going to read the wording for you so that you can see not only that, but all the other weird things that you can do with an HSA that I don't believe I've seen any other person or advisor do, probably because they haven't studied that. I don't know. We'll see. So join us tonight there for that. And if you're a client, we'll see you there at 8 o'clock for Wine and Wealth as well. I'm going to post it. Make sure we've had some issues with the Wine and Wealth doing it live. So we're going to post it, make sure it's, goes well. All right, questions here. You want to announce a recession? Oh, no. Well, we changed the definition of the recession. So, yeah, it is just probably never going to be one again. Well, I got an opinion on something. I missed it. Well, I forgot what it was. Dustin Dodge just transferred another 10K, which means the market will start dropping. I've had that luck myself, Dustin. Don't buy. Maybe it's just the curse of the Dustins. I don't know. But I've often said, Eric will be like, when's this market going to pull back? And I'm like, give him a checkbook. I'll get it to pull back. Oh. Deere earnings coming up there. Oh, yeah, let's see what we got here. Do I have anything? John Deere. Beats on earnings 81% of the time, revenues 60% of the time. It is positive. It's kind of a flip there. It's not the biggest mover. 7 of the last 10 times, if you own it, you wouldn't lose any sleep over holding it through earnings. I have a feeling that might be what you're asking there. Yeah. Late to the show, quarter point interest rate hike more likely. As of today, no. A pause is more likely for the moment. Based on the 5 Fed members that talked today. 5 of them. Yeah. But they're damned if they do and damned if they don't, right? Because Fed members talking, you're like, oh my God, shut up. No, just wait. The market, you're moving things around. You're making it tough. But if they didn't talk, you'd be like, what, do these guys play golf all the time? Like, what's happening? So, you know what I mean? They'd get grief either way. I kind of get that. I kind of understand. Hey, if you're one of our clients, tonight on Wine and Wealth, rental properties and your taxes. We're going to talk about that there. That's a different one there. What is tax deductible? How do you know if you get the depreciation? How do you know if you're taking enough of it? We're going to go line by line. And I'm actually going to share a visual that we made, just simple, right? What's happening? Do it real simple. I know I already said that, but for those of you that are late, like Nick, be able to enjoy that. If you're not a client of Jazz Wealth, come join us. jazzwealth.com. It gets wilder by the day. All right, I'm going to wrap it up here and get on out of the way. I've got work to do, man. You guys enjoy the rest of your day or evening, and we will, we'll see you later.